All right, everybody. On this episode, it's a fun one. We got a special guest, Langdon Roto Root. I call him Roto. That was his call sign in the Air Force, and that's how I know him. But Langdon is a retired Air Force colonel, F-16 pilot, tactical operator, worked at the Pentagon, did a bunch of cool stuff in the Air Force. And he became a client about 3 years ago of mine, and he became a friend of mine about 12 years ago. So we go back a little ways from our time in the Air Force together. And he provides some really good insight in what it means to be thinking like a banker in this episode. I think he gives us no fewer than three personal examples of what he's done in the last 3 years, the opportunities he's had to actually use his policy and take cash value loans to benefit his situation in a way that he would never have been able to do had he not had access to that capital and started using the system 3 years ago. So I hope you guys enjoy. It was a lot of fun having him, and I know everybody seems to enjoy these client interviews where we get to hear from other people besides just me and Paul. So we'll try to do that more often in the future, but enjoy this one. Hey, I'm Dave.
And I'm Paul.
And this is the Wealth Warehouse Podcast. All right, welcome back, everybody. Hey, we got a special episode today, something I think everybody's going to enjoy, as they always do. We always get a lot of good feedback when we have guests on the show. So I don't know, Paul, why do we not have guests more often? We're just very picky.
Well, I don't know, it's somewhat picky, but also people aren't always available, either scheduling or maybe they have some sort of professional constraint where, hey, I'd love to be on, but I can't speak to my personal finances because of X. And, sometimes that's a limiting factor as well.
Yeah. Well, today we've got a good friend, a client, actually, and a fellow military brother, Langdon Roto Root. Welcome, Langdon.
What's going on, guys? Thanks for having me. I appreciate it.
I have such a hard time calling you Langdon because you and I met 10 years ago, 12 years ago, and I was calling you Roto ever since then. So Langdon, that's tough for me, but I'll try. I'll give it my best.
That's all right. My wife has even started calling me Roto, so I'm not sure what my identity is anymore, but we're transitioning. It'll be all right. It'll be good.
Yeah. All right. Well, awesome, man. So yeah, speaking of transitioning, you're just retired from the U.S. Air Force after an illustrious 26-year career, retired as a colonel. You and I met back in, I think, 2012. Were you there when I showed up at the ASOS in Kansas?
Yeah, I was.
So you were my boss. Back then, we ended up living in the same neighborhood in Manhattan, Kansas. That was awesome. Our families got to know each other, the kids, same age. So it was pretty cool to see everybody kind of grow up through Facebook, at least, in the last 10 years since we departed. But yeah, so your background, just real quick, that I'm aware of, F-16 pilot, and then moved into the tactical community, the tactical air control party, which is where I met you. So leading our enlisted folks in the Air Force who are out in the field calling in strikes from F-16s and A-10s and probably even Apaches. So pretty cool.
Maybe.
Yeah, maybe. So, and then finish your time at the five-sided prison. You spent some time there, and then you finish your career in Georgia at a base I was at too. And speaking of Georgia, just so everybody knows, Valdosta, Georgia, you guys were hit pretty bad by the hurricane just a little bit ago. So it sounds like you've got a backup internet source right now, huh? Elon came to the rescue.
Boy, there's no better marketing strategy for Starlink than the natural disasters that have been crushing Florida and South Georgia and some of those areas out here. A lot of neighbors, and us included, jumped over because it was taking the other providers, weeks to months to get the internet back up. So, yep. This podcast brought to you by Starlink and Elon Musk.
Yeah, well, thank God for capitalism.
Amen.
Because that's what makes that happen. So good. So speaking of Starlink, it's a little sketchy every once in a while. So if you cut out, we'll just continue, and then you rejoin when you rejoin. So anyway, but I gave everybody a little intro on you. I'd like you give us your background real quickly, and then talk to us about how you got into infinite banking and what that process was like. Like what appealed to you. So I'll just hand the floor to you for a minute here.
Yeah, awesome. Hey, thank you for that, David. It's such a pleasure to be on here. And I've got a chance to meet Paul here recently and start to develop that friendship as well. But it's so neat to be able to be a part of something cool that works financially and professionally while also doing it with friends. So, hey, my background, just to touch some of the highlights. Um, yep, Indiana boy, came to the Air Force, flew F-16s for a decade, jumped into Air Force Special Warfare, kind of leadership stuff. Had a blast doing that. Spent a lot of time on Army posts, so we probably have some of the same dirt in our boots, Paul. And then 6 years in Washington, D.C., and several jobs on the Joint Staff, and then Air Force A3, to include managing the Air Crew Crisis Task Force for a little while there. A lot of work on the Hill and working on national problems with Airlines for America and the national pilot crisis. That was a good time before deploying for a year back in 2020, 2021. That was a good time being remotely deployed during COVID. Plenty of good stories there. And then, building the air plan and then executing the air plan for the retrograde out of Afghanistan. That was a career highlight. And then jumping back to the Pentagon for a year before closing out my career as a deputy wing commander down here at one of the wings here at Moody Air Force Base. So married, got four kiddos. One's out of college, one's in college, and two are in private Christian school down here in Georgia. Been married a long time to a wonderful gal, and that's kind of where I am as I am transitioning out of active duty Air Force and getting ready to start a second season, a second career, and what I think is going to be the financial industry. But we'll talk a bit more about that. What drew me into IBC in particular is I got to start by saying that nothing happens without the providential hand of God, and I try to be sensitive to where the Spirit's kind of driving me. And so I got an introduction to IBC from a friend that wasn't you, a couple of years before you talked to me about it, and he tried to explain it to me several times. I just didn't get it, and it just didn't click for whatever reason. I didn't have time. I was busy at work, and so I got an initial introduction from him. And then a couple years later, when the time was right, and you and I had stayed in contact after our assignment together, and you started telling me about what you were doing. And so I started asking some questions. Um, and those questions were motivated by some realities in my life. And one of those realities was I did the math when I was a 23-year-old lieutenant about, hey, if I did my Roth IRA cost dollar averaging, then if the stock market's doing the 8 to 10%, then by the time I'm 40 years old, I should have this. I remember those thoughts, those conversations, and the math that I did. And, I was at that time, I think 44, and that turned out to not be true. And
Oh,
so
yeah, what you
my
thought was going to be.
exposure,
Yeah.
yeah, my exposure to the National War College, studying global economics and starting to understand how the Fed Reserve works and politics and how they control inflation to a different degree, my knowledge base started to increase, and I started to realize that, you know, what I was told by the Bobs, by the talking heads in the financial industry, wasn't coming true, and that I probably needed to do something different. And that was also influenced by we started an LLC to put some of our rental properties in. And so I got the chance to deal with financing and underwriting and a different way to grow your wealth besides the stock market. And those two experiences together made the ground fertile for me to be open to the idea of infinity banking. Um, and so we started to talk. Bless your heart, you're really patient with me because
I was very patient with you.
you were very patient with me. And it was a 3-year process for me, man, because one, you're a really good friend. I didn't want to jump into a money situation with a really good friend unless I was absolutely sure that I understood it, because I think good friendships need to stay good friendships. And so I wanted to fully understand what was going on. I want to understand how people are making money, where the risk is. And until I understood those things and exactly why I would do this, I wasn't willing to jump into it. But after I got all those questions answered, I grew comfortable with it. And that's when I pulled the trigger and we opened a policy. It was about 3 years ago.
Nice.
Yeah, I was gonna say, Langdon, do you think it was more understanding the process of the infinite banking concept, or was it the hang up of the whole life product, or maybe a combination of both? Couldn't really separate one from the other in the early days.
I've listened to a lot of your podcasts, and a lot of it rings true with me. I think there's an education process that has to happen, right? If you want to understand the benefits of a whole life policy and how a generic whole life policy differs from what you guys are doing with the high dividend cash value policies, you really have to start by understanding the language. And insurance has its own lexicon. Like you have to understand what each individual term actually means so that make you can ask smarter questions to make better decisions. And so for me, it was like, okay, why would I pay premium? Like that's a bill, right? And so you guys go through the process in your podcasts of teaching people that, okay, if you look at it as a bill, then you're not going to get this. And so it takes some work to open your mind to understand, no, that's not a bill. That's an investment that you're making in your own capital. It's an investment that you're making in your own future. And let's take a deeper dive and look at all the different ways in life that you can use this policy. And once I started to understand the potential to change my finances, my life were built, then it started to make more sense to me. But it took, I read 3 or 4 books, lots of podcasts. I did ask lots of questions to make sure that I was walking around, IBC the best that I could. So I knew what I was getting myself into. And my experience in the Pentagon really had a lot to do with this as well. I mean, there's a lot of great people up there, but what I saw as a third party, an objective third party, what I saw is a political system that really motivates politicians to keep interest rates artificially low. One, to get elected and reelected, but two, because our ballooning national debt is cheaper if inflation goes higher. And so in an environment where our officials get elected and it's hard to get elected on hey, I'm going to let interest rates or APRs get to 10% so that we can slow down inflation. That's really hard to get elected. And so I started to see a future where the dollar gets shakier, and I wanted to hedge against that. That was another big reason why I wanted to put a capital leg down in my tripod of finances that was less exposed to the stock market and political machinations from 2 and 4 year politicians.
Well said.
Yeah, very well said. So I would say you were probably one of the most thoroughly educated clients I've ever worked with, and I really appreciated that by you. Actually, back then I had more time to spend with you than I would have now, to be honest. But the fact that you read books, you ask questions. I mean, you ask a litany of questions and really good questions, and then you spend time even getting your wife on board, letting her understand what's going on with this, and working as a team with your wife. Some people do that unilaterally, unilateral family financial decisions, and others, and it's one or the other. More often than not, we're working with the husband, but sometimes it's the wife. I've got somebody recently it's the wife who's in charge of the finances, and she's making the decisions. How would you talk to somebody who's trying to get their spouse on board when maybe they're not going to read all the books that you're reading because they don't have the time or maybe it's not their interest, but they still want to understand it? How would you speak to people like that?
Yeah, I think you have to start by knowing your spouse. Like some spouses, there are some conversations when it deals with finances where my wife, her eyes roll in the back of her head. She's like, I trust you. I'm not concerned about it. When we start talking about moving a significant chunk of our income into premium payments, either mandatory monthly or the ones that we make because we have the option to, the privilege to, that took a little more conversation. And so when I was talking to her about the policy, I really kind of focused on 2 things. One is how this will change our life for the better, like the options it gives us. And so that was focused predominantly on legacy. When I die, this is how you'll be taken care of because the policy's on me. In life, when we decide that we want to retire, one of the hardest things about figuring out how much to spend in retirement is your qualified plans and how much do you meter those out, your 401ks, your IRAs. When am I going to die? Well, I don't really know. So there's this antiquated 4% rule where I'll spend down 4% because I'm assuming the stock market, and you're really betting how long you're going to live. And one of the things I sold her on was, hey, this gives us the opportunity to plan exactly when to spend to zero in the qualified plans. We can go, let's say we start at 65 and we want to spend from 65 to 85 and spend all those plans down to zero. So while we're young and virile, we can still go out and travel and spend on our kids and give. And then we start to get a little bit older, we can start to borrow from our policy and use that as a tax-free pension. And so I saw it as a way, we may choose not to do that when the time comes, but it is another option that we can have to have a more deliberate way to spend our retirement years, income-wise, with more security. And then I talked to her about individual applicant, like we can actually save money with this if we have some capital that's set aside. And you had a previous podcast where I think
Yeah.
you mentioned our
I
scenario.
want you want to run into this, go into this story. This is episode 23. We have a full podcast on this one, and we're speaking about you in episode 23 back in July of 2022. So over about almost 2.5 years ago, we you discovered something that was one of those light bulb moments of when you become your own banker, you start thinking differently.
Mhm.
And you had one of those moments. So please, yeah, enlighten us on kind of your first light bulb moment experience as your own banker and what you did.
Yeah, when you get into the policy, some of the examples of how you could use the money are theoretical, but this was really the first time I had a chance to apply it and get a return on my investment. And so at the time, we had three kids in a private Christian school down here. And, the tuition bill comes due at the beginning of the year, and you have the choice to make monthly payments throughout the year, or you can pay one lump sum up front. So I went to the front office and I said, hey, do I get a discount if I pay lump sum up front? And they're like, no, no, not really. And I said, oh, do you have a multi-kid discount? And they go, oh, actually, we do have a multi-kid discount, and we combine it with, I guess there is a lump sum discount. And they said, if you,
Nobody asks that, right? Nobody
right,
wants to pay it all right now.
right. And
Yeah.
so they said, hey, if you have three kids or more, then every kid after your second kid, if you pay lump sum up front for all three kids' tuition, then that third kid, you get a 50% discount on that
Ooh,
kid.
Wow.
And so for us, that ended up being about a 20% savings on the total amount for tuition for the year. So what that did for us is instead of making a $1,700 a month payment for three kids' private tuition at this school, we were able to pay one lump sum and then pay our insurance policy back at the sum of $1,200 a month. So we basically saved ourselves a $500 a month kind of bill over the course of the year. So that was an example of, something I talked to my wife about before we got the policy as a way to make her feel better about how we were going to be able to use it. And then I was able to put, meat on those bones for her and go, hey, look, we saved some money here. So we have to be diligent to make sure we're good bankers and we pay ourselves back. But that's one of the ways that we've used the policy to improve our options for how we deploy our money.
Yeah, so you started to think differently as an independent, your own banker at your level, and an opportunity presented itself and you were able to take advantage, and really it just increased your rate of return on your money when you think about it, and without any with really addressing the opportunity cost, because the money inside the policy isn't touched, right? You're using the life insurance company's money to do this, so there's no interruption of your capital accumulation, right? As our listeners know, and you got to save yourself 20%.
Yeah,
Yeah.
and I think we calculated the numbers even differently. That in the episode, I did some calculation back then that showed it was more like a 33%. It was equivalent. You said 20% savings, but as an investment, it was equivalent to earning a 33% tax-free, risk-free return on your money.
Right.
Mhm.
So if you just switch your thinking, instead of how much did I save, or what would I have to do equivalently to turn $1,200 into $1,700 in a single month? But I did that over a year. Like it's probably even more than that. I just did my little ROI calculator. If you have 1,200 original investment, ending investment 1,700 over 1 month, that's a 500% annualized return. So I don't know how accurate that is, but I'm just quick thinking right here. But just the different ways you can
get
think
the
about
point.
that, it's pretty awesome what you're
Yeah,
able to do.
I want to hit on the control side of it as well, because I know that's important to you guys. And I'm feeling it real time because it's important to us too. There's a couple of different ways. Like this year for our tuition, we had the same basic scenario, and we paid our tuition up front. But this year we had two high school graduations. We had my retirement ceremony. We had a vacation and travel. And so we just decided, for this month and next month, we're just not going to make our payment to ourselves for the bank. We pay a little bit more interest, but that's worth it to us to have the control to, skip a payment if we want to, because we're prioritizing differently in our family this month. And if you got time, I'll tell one other story about how we've used policy to gain a little more control.
Oh, we've got time. Go for it.
Yeah,
Yeah.
keep going.
Yeah, one of the things that attracted me to policy was the ability to, over time, remove banks and the control they have over things like titles and deeds from my life. Um, I'm not a conspiracy theorist, but I do like to look at the way that certain systems are set up and are they for or against me? And I know that when I take out a 30-year loan on a mortgage, that the bank is incentivized to work with me to help me stay in that house for the first half of that 30-year mortgage because they don't want to get stuck with a house that they have to sell and they're going to sell it for less than what it's worth and there's risk to them. But the longer I make those payments, if I'm on my 25th, 26th, 27th year of making those payments, and now I've paid all the interest to the bank in the first half of that loan, and now I'm really making progress, and the house is almost mine. I still don't have the title. I could be on my last payment. That's not mine. They still have title to that house. So I think human nature, and we saw in 2008 when the crash happened in housing, the banks become a lot less flexible, and they're trying to mitigate their own risk, and they're less inclined to work with me when there's a lot of financial gain for them to foreclose on my house towards the end of my policy versus the front end of that. So control is important to me. I'll, that's a story to flip me to. We bought a couple of used cars here this year as kids are getting older, and so we bought a couple cars. And so one thing I can do is walk into the true story, walk into the auto dealership and go, "Hey, we negotiated the price? Okay, would you give me a little bit more off on the car if I pay cash up front?" And this auto dealer's like, "No, there's really no discount for paying cash." But then he came back and said, "We will give you $1,000 off if you finance with us." I was like, "Okay, well, is there a penalty for paying off early?" And they're like, "Nope." It's like, "Okay." So I went ahead and financed through them. I got a few points off my credit score that month. But after I got the first, invoice from Wells Fargo, I went ahead and borrowed the cash from my policy and paid it off. And so I think I ended up paying like $80 in interest. And so I ended up getting a $920 savings on the car. But the beautiful thing about it is now we're financed through our insurance policy. So we're paying that car off faster, by the way, because we're paying more than what the payment would have been. But instead of 5 years, it'll take 3 years to get paid off. But the title to the car shows up at our house. Like we own
Mm-hmm.
it. The world knows that we own it. And because we do own it, we're just paying the policy back. So you get the control of like, it's mine. It's my car. I've got the title to prove it. And I saved some money and we can pay back at our own rate. And so that control is just as important to me as saving a little bit of money here and there.
That's awesome. And
Brilliant.
that's a perfect example of what you can do when you have access to capital and you start thinking like a banker. Because, I mean, how many of these talking heads would say, don't ever finance? That's the dumbest thing you could do. I don't care what they say, don't ever finance. Well, you financed smartly and made almost $1,000 doing so. Like,
Yeah, it does. It allows you to look with eyes wide open on opportunities to take advantage of, not only to save money, but as an investor, right? Like I've not used my policy yet as to pursue specific investments, but my eyes are open. I know eventually I am going to take advantage of that.
Yeah, that was just like three IBC in action stories from the same person in a relatively short amount of time.
Yeah.
And I think I would consider Dave and I kind of like IBC purists, and we care about what Nelson said. and how he thought, and that's exactly what he envisioned, I would say. And then, investing being the next step if you choose to, right? It's your system, you do with it as you wish.
Now, if you go back, you would not have been able to do that had you not created a policy and built it around a premium that was meaningful, in addition to being manageable. So a lot of people just kind of want to dip their toes in. They're like, maybe, $300 a month. I don't want to do too much. And then they wouldn't have the capital available to be able to prepay that tuition
Mhm.
or pay for that new car with it. It's going to take them a long time. You paid significant premium relative to your income, as Nelson suggests. And that's what gave you the ability to have all that control and making all those decisions from a position of strength along the way.
Yeah, and we were blessed as well to be able to throw a lump sum in at the beginning, right? Like we were able to kickstart the cash value so that the dividend was more meaningful and combine that with the higher mandatory premium, because that was really the focus, right? We sat down and we talked a lot about, hey, I want to generate cash quickly. I want this to be efficient as fast as it can be, partly because long-term cash growth in the policy, but also because I am fully aware that I am capable of being wrong. If you're not sure about that, ask my wife. She'll tell you that I'm wrong on a fairly regular basis. And so part of the decision to jump into this is what if I'm wrong about this and I don't like IBC? It just doesn't fulfill what I hope it will be. How long will it take me to make my money back, right? And so an efficient cash growing policy was like, hey, at the 7 year mark, I can take 100% of every dollar I've ever put into this and close my policy and leave if I want to. So there is an escape hatch if this doesn't work for you. And it's different time period for different people, but that was part of the incentive to capitalize early so it grew fast. So have an escape hatch if I don't like it, and I've got lots of capital to play with if I do like it. I'm 3 years into it. I like it.
Yeah. Yeah. Well, you like
Yep.
it so much that what did you do recently?
Well, I am in the position of trying to figure out what I'm going to do with the rest of my life when I grow up. And so the joys of having a military pension allows you to pursue things that you're interested in. And so I have felt blessed by this mechanism, IBC, and this policy to the point that I just saw around me some friends and family that need this in their life. They just don't know it yet. And so I wanted to get smarter on it. So by working with you and one of the carriers that you work with, I went ahead and got licensed in the state of Georgia to sell insurance. And I'm going down the same path of building these policies specifically for growing the cash value so that people can become their own bank. And I've got a few customers on the line that I'm getting better at communicating this stuff with. But I didn't want to just be a guy that does it. And it's kind of like your belief system, right? Your theology. If you believe something, do you believe it enough to tell people about it because you want them to experience the same rewards and blessings and joys? And this is one of those things that I believed enough in that I wanted to spread the good word, if you will.
Yeah, that's great. And that's the same reason Paul and I started doing it.
Yep.
Yeah.
Good. Yeah. Well, that's great. So, what's next in your journey? So you're transitioning, and that's a different term when it comes to the military than pop culture. So you're transitioning from the military to the civilian world, and it's obvious
Yes.
because you have facial hair now that looks like it's more than just a weekend's growth, and
Yeah,
it's a lot
man.
whiter than last time than I remember
Yeah,
it
there's a
being
lot of
when we
salt in
used
there,
to.
man.
Yeah. So, but it's actually very Christmassy right now.
Yeah.
And this podcast is coming out in December, so it's perfect, man. Red
It's
sweater,
perfect. He's
white
got a
beard.
red quarter zip on and a white
Santa,
beard.
Santa Roto. I like it.
Yeah, yeah. So what is next in the evolution of you? Because you're not somebody who you're kind of like us. You're not gonna just sit back, receive your military pension, and kind of do just hang out. Like you got a lot more to accomplish in life. So what's your plans going forward?
Well, I'll tell you, all the transition assistance, programs and, Paul can vouch for this. They all tell you about it's important to know what you want and then communicate it well with an elevator speech. I, I'm uh, I'm not that guy, right? I'm pursuing things I'm passionate about, and things that I'm passionate about are helping people and solving problems. leading coaching and mentorship, and the financial industry. And so trying to piece those things together in a way that is rewarding, allows me to continue to find purpose and get out of bed in the morning, has been a fun and interesting challenge. So that started with getting my insurance license here in the state of Georgia. But then I also signed on for an internship with a small boutique investment bank called Donald Capital. They're fairly new, but they focus specifically on the aviation, aerospace, and defense world, on small cap companies, 500 million and below. And they're really trying to connect capital to these unique and amazing companies that are trying to bring world-changing technologies, not just to the government and to defense, but also to the commercial sector. And so I get a chance to see these amazing, from seed capital, angel investing, all the way up to E-series and pre-IPO companies that are trying to take the next step. And we get to come alongside them, whether it be with a merger and acquisition transaction or business advisement or just capital raising, just helping them raise the capital they need to build another warehouse to take their widget to market. And that's been really rewarding, as it's allowed me to connect people that I know from my time in the Air Force with industry. And so it's been fun because I'm learning capital markets and how they work. I've got a great mentor who's the space commissioner in Texas, and he's a fabulous human being. I get to work with great people who are trying to do amazing things for our country and for capitalism.
Right on.
Perfect.
Yeah.
So I've got a military retirement specific question for you.
Yeah, lay it on me.
And it's around, because we have a lot of military listeners. Obviously, Dave and I and you are from that background. So the survivor benefit plan, thoughts?
You broke up there just for a second. Can you ask the question?
What are
again
your
about survivor
thoughts?
benefit?
Yeah,
My
what are
thought?
your thoughts on the survivor benefit plan, the SBP for short?
Yeah. Yeah, okay. So this is a really interesting question. It's timely because I've got about another 45 days before my wife has to make her final decision about what she wants to do with it, because she gets a voice in this. And
Now she
personally,
gets a voice in it, like legally through the military. They need her
Correct.
sign off on it, right?
To
correct.
opt out,
Yep.
right?
To opt
That's
out, you
right.
need your spouse's sign off. Got it.
That's right.
Yep.
And so the way that we're handling it here is it's her choice. So I'm an advisor to her, because at the end of the day, it's a financial decision for her. Should I pass away? Should I die? Part of the reason, one of the, probably a dozen or so reasons that I bought the whole life policy from you, Dave, is I didn't want her to have to take any of my pension and apply it to this insurance contract, basically, with the government, which is what the survivor benefit plan actually is. And so what she has decided to do is sit and think on it for a while, right? And so in our house, she is probably going to go ahead and take SBP, and I'm okay with that, because it's another income stream. Should I pass? So she'll get the big lump, benefit, my insurance policy, should I pass away, and then she'll get the survival benefit, and that's her choice, right? That's money that's going to be wasted if she dies before me. That's several $100s that we're not going to have in our pension, our income post-retirement. But like I told her, honey, I'm not planning on that being a game changer amount of money for us. Like I've got things to do, and I've got purpose, and I'm going to be a good earner for the rest of my life, or my working life. So you make the decision that you're most comfortable with based off of what you want your life to look like after I pass away. And if I die a month after we separate, that's obviously different than if I die when I'm 95 and you're 97. Then think those things through. You make a decision you're comfortable with, and I'll support that decision. That's how it's gone in our family. Now, if you ask me what I think the best financial decision is, because I think I'm going to live to be 100 and she's going to die before me, like all that stuff, I wouldn't do the SBP. I think putting that money into the whole life policy is more beneficial. But I understand there's psychology here. There's heart, there's comfort level for your spouse, and I think every military member trying to make this decision should really listen more to the heart of their spouse than just a numbers decision.
Yeah, I think that answer was fantastic. In the end, you are transferring risk away from yourself, away from your family by opting into it. And if anything changes, there is a window of time that you can actually shut it off. There's that one window, fairly early, between 12 and 24 months or something, whatever it is.
Yeah, and I hate to. My plan is to stay happily married for the rest of my life, right? But as part of the eyes wide open conversation I have to have with my wife to feel like my integrity is high, is when, heaven forbid, something were to happen in our future, and if we were to part ways in our marriage, I still own the insurance policy, right? And I can change the beneficiary. SBP gives you more protection in case that future ever happens. And so I almost felt like I got to be a lawyer a little bit and pull the hat off and go, hey, this is our plan for forever together. But here's some contingencies to think through if something weird does happen. Because she's put up with me for my military career and all the deployments and TDYs, and I want to make sure she's taken care of no matter what.
And then it makes sense to give that decision to her.
Yep.
Because she's earned it. She's earned the right to make that decision because she has, kept the home front stable and raised kids without you.
Amen.
And done all of that stuff on her own, all those times that duty called and you had to be away. So that's fair. So,
Yeah,
great answer. That's a perspective we haven't heard before.
It is, and I like how you treated that. You really gave it some thought as a family and as a husband and wife unit, and I think that's important. Usually it's blindly just assumed that, yep, we're taking it, or we're not taking it in some cases, and people are taking it or are not taking it, and they don't have any insurance either. And I'm like, what are you doing?
Yeah.
If you can't get insurance, we say this in the program all the time, you can't get insurance because you're beat up or whatever, uninsurable, take it. You have to take it. It's a no-brainer. Oh, I just heard a doorbell.
That's the doorbell, man. Cleaners are here.
You remind me of a funny story, actually, because when we sat down with our SBP advisor here at Moody Air Force Base, he's a fabulous human being, retired, military guy himself. He gave us the full brief like he has to, both me and my wife. And after we're done, I explained to him what I had already done with a whole life, and how I've already kind of handled the insurance. He looks at her and he goes, yeah, that's what I did too. Your husband's got you covered. You don't need SBP.
Oh, wow.
That's what he said. It was actually an interesting moment. It's validating. A little pat on my back, and so we went back and talked about it, and I think she's still gonna opt into it and not opt out. So we'll see what happens. I'll update you later.
Yeah, let us know when you come back on. So we definitely want to have you back on, man. I think everybody listening is going to get a whole lot from this episode. I know I did. I learned some things that I hadn't thought about before. So cool. Thanks for your candidness, your openness, and for coming on. And I'd love to have you back on. And I'm going to be seeing you here in a couple of weeks. Actually, you and I, about this time this podcast comes out, maybe it'll come out actually when we're hanging out together.
Oh, that'd be cool.
Yeah, we're gonna go race some cars, some exotic cars in Vegas. So
what could possibly go wrong?
What could go wrong?
Racing cars. It'll be a good time.
Yeah, maybe I'll take some clips and we'll post them, see what happens.
Yeah, man. Well, thanks for the chance, guys. I appreciate it. I love what you guys are doing. You're doing yeoman's work. You're kind of an outlier in the financial world, but it's a voice that needs to be heard, and you guys are doing a good job getting the message out. I know your following is increasing because of the quality of the work that you guys are doing. So thank you.
Yeah, appreciate that, man.
Yep, appreciate that. Well, thanks, brother. Thanks for joining us, and enjoy retirement. You earned it. You deserve it. And for everybody else out there listening, hope you have a good week. And until next time, control your capital.
Or somebody else will.
Hey, thanks for listening, everybody. If you'd like to have a conversation with us to see how you can become your own banker, or if you have any questions or topics you'd like us to tackle on a future episode, please send us an email to davidandpaul@theibcguys.com.
And subscribe and leave us a review if you're on Apple. Follow and leave us a 5-star review if you're on Spotify. And please share this with your friends. We'll see you next week.